all righty, everyone. Welcome to the OG Social Network Podcast, sponsored by Proteus 420, Silk Road, NYC, and so many others. We're going to give them shout outs later. I am currently here with Kathleen Barreau, is a licensed mortgage broker and trusted financial guide, known for helping individuals and families navigating home ownership with clarity, confidence, and purpose. As the founder and principal mortgage broker of Pristine Green Financial Solutions, LLC, she brings a strategic education first approach to leading that empowers clients to make informed financial decisions. With extensive experience across conventional FHA, VA, down payment assistance, refinance, and investment loan programs, Kathleen specializes in working with first-time home buyers, entrepreneurs, and those who may feel behind or uncertain about their financial path. Her strength lies in simplifying complex financial concepts, uncovering opportunities others overlook, and guiding clients through pivotal life transitions with integrity and care. In addition to her mortgage work, Kathleen is the host of Chat with Katt, with 3 T's, where she amplifies stories of resilience, leadership, and personal reinvention. Her work is driven by the belief that wealth building is not reserved for a select few, but is accessible to those equipped with the right information, mindset, and strategy. Grounded in authenticity and purpose, Kathleen is recognized for her calm, confident, strategic insight, and unwavering advocacy for her clients. Whether guiding a client toward their first home, restructuring a financial plan, or empowering someone to believe in what's possible again, her mission is simple: to help people build stability, confidence, generational wealth, and one informed decision at a time. How you doing, Kathleen?
How are you? How are you? How are you? How are
I
you?
noticed our last interview, my beard was longer, as you can see. I had to take it down a little bit, and
Looks
your
good.
hair is different. Yeah, you look good too, girl.
Thank you. Thank you.
So, other than that, yeah, we are here with Kathleen today, discussing the obstacles and ups and downs of purchasing a home, of having a reliable business consultant in that field that you could trust to give you the right answers to help you navigate purchasing your home or refinancing, whatever. So I'm going to just go ahead and get started with our first question. Okay, Kathleen?
Okay, that's good.
All right. So what we want to know is just tell us about your background and how you got into the mortgage business, and what led you to start Pristine Green Financial Solutions.
Okay, so I got into this industry back in 2006. I was working for a jewelry manufacturing company, and my oldest brother, he was the principal at the time for this mortgage shop in Kendall. And he's like, oh, they're looking for processors. It's a really super easy job. I'm like, okay, what does that entail? And he told me what it is. I was like, oh, okay, this doesn't seem so hard. And so I ended up starting there like the following Monday or whatever. And I did absolutely well as a processor. A lot of times people don't understand what processors do. They're so your mortgage broker or your loan officer is the actual quarterback that's structuring the plays or structuring your whole transaction if you're trying to buy a house or you're trying to do a refinance or a HELOC. And then they have these assistants called processors or loan processors that'll reach out to you and tell you, hey, these are the items that we need. They reach out to the lender on behalf of the loan officer, because the loan officer is out, shaking hands and kissing babies. So I did that for a few years. And then when the market, had crashed in 2008, I then became a realtor because a lot of people had lost their homes in the housing crisis through foreclosure. Some people, marriages didn't last, that they were doing short sales. So I ended up becoming a realtor, and I specialized in distress sales, and I was helping, people find rentals because they had lost everything during that market, during that housing crash. And fast forward later, I am a serial entrepreneur, so that's why I'm really passionate about helping entrepreneurs with home ownership or just expanding their investment portfolios, because oftentimes, not investors, but entrepreneurs will get overlooked, and will get overlooked saying that, oh, their income is not traditional. I have to do all this creative financing to find you a loan that fits, your bucket. So that's one of the reasons why, when you read in my bio, that I'm really passionate about helping entrepreneurs. So fast forward, I was a serial entrepreneur at the time. I think I was doing insurance, and then a friend of mine, has his own mortgage shop, and he had tapped me to be his processor, and I did. And so from there, it kind of just like led me to want to start my own boutique shop, specializing in, like I just said, helping the little guy, entrepreneurs, wage earners, those who may not have the traditional trajectory that most brokers would like. And I just like to help them to get you, empower them into home ownership. So my company is maybe 6 or 7 years old. I opened it back in May of this year, and we've been doing extremely well, doing really good. A lot of referrals. I'm really grateful for that, because I was so surprised that people had actually reached out to me and are giving me referrals for purchases, refinances, HELOCs. I'm really, honored. So that's how I did it, and that's where we at right now.
What do you think is that one thing that most people misunderstand about mortgages and the mortgage process?
Okay, so all right, so let's get to it.
You don't.
Okay.
Mhm.
You wanted to say something? I'm sorry.
No, go ahead, please.
Okay, so a lot of times people often equate mortgages with their credit score. Oh, my credit is terrible. My credit is this, that, and the other. But there's like other layers in the mortgage process besides, your credit. It's like a tapestry, I like to put it. It's a picture, and it's like a jigsaw puzzle. There's all these like intricate pieces that interlocks to make this masterful piece that you present to the lender, and the lender decides, hey, whether or not you are approved and you can move forward and have your purchase or your refinance funded, or they might, decline and say, hey, no, there's some other pieces that we need to take into consideration for this puzzle. So aside from the credit score, you also have to look at your documentation. You also have to look at the debt that is actually on your credit report. And then there's other underlying issues, like, well, what type of loan is it? What's the purchase price? And the income that you're generating versus the debt that's coming out, that makes you a qualified or a good candidate for a purchase. So aside from your credit score, again, you need to look at, your debt to income ratio. The debt that's on your credit report and the income that's coming in. Also, how is the loan? What type of loan are you getting? Are you getting an FHA loan? Or FHA loan are typically more stringent because they're governmental loans. Or are you doing a conventional loan, which might require a higher credit score? Or are you doing a VA loan? And VA loans, those are for veterans, and there are guidelines. There's specific guidelines for veterans in order for them to get those type of loans. So those are the variables that you have to take into consideration when you are looking to be to get qualified or to be mortgage ready.
Well, then, what's the biggest challenges then right now for buyers and homeowners?
So I want to say the biggest challenges for buyers and homeowners. Well, I'll start with buyers because they're two different groups. So for buyers, your biggest challenges would probably be your down payment, and then your closing costs. Down payments are not exactly cheap, and your closing costs are not exactly cheap either. But the good news is that lenders are coming up with so many different types of programs where they're trying to help the little guy, help the person, these, your first time home buyers, or those who might have who purchased a home in the past and that are looking to re-enter the market. They're coming up with all types of programs to assist buyers, whether you're first time or you're re-entering the market. So when I say what type of programs that they might have, they will have like your down payment assistance, and those usually used to be reserved, or mostly the county in whatever state that you lived in offered down payment assistance. But now lenders are now in that arena offering different types of home buyer assistance, where some lenders are allowing you to put just as little as 1% down. Then you have your FHA down payment assistance, where they'll cover up to 5%. And then if you don't qualify for any of those types of programs, you have some lenders that allow you to buy down your interest rate with certain credits if you meet certain guidelines and criterias. So those are some of the unique things, challenges that first-time home buyers or buyers that are re-entering the market will have to undergo, is their down payment assistance and their closing costs. And then for those who are already homeowners, the challenges for them, I would say, is their homeowner insurance. So being that I'm from Florida, Florida
Ooh,
makes it.
girl, Jesus Christ. I mean, y'all had like big insurance companies to say, fuck this, I'm leaving. They're not
Yes,
even trying. So,
yes.
go ahead.
Yes. So the biggest issue for homeowners is their homeowners insurance and your taxes. So like you said, there's a few insurance companies that have jumped ship and said, we can't take on any more of these liabilities. Liabilities meaning that we experience our natural disaster, our hurricanes. We don't have snowstorms. We may have tornadoes here and there, but our our natural disaster is hurricanes, and we get some of the worst ones. But thankfully, the last couple of years they haven't been so catastrophic as some other states have experienced. But still, a lot of these homes are a lot older, so they have structural issues, roof issues. And so like you said, a lot of these insurance companies have jumped ship, and they, like you said, they said, screw this, we're out. And when you have these insurance companies that jump ship, you have a limited supply of carriers available. So now they're able to, create a higher demand. That means your premiums are going to increase as well. So that's one of the issues there. And then you have your growing property taxes, because it's not only just your principal and interest. You also have to take in consideration the taxes and insurance, and your taxes, which is a non-negotiable. You can't do anything about that. That's what is set by your county for what your property insurance. And so those are the challenges that homeowners are facing here in South Florida, or in Florida in general.
Okay, well, you definitely answered one of my questions already on that, because
Oh,
yeah, because I have dear friends there that I was speaking with a dear friend of mine, and lives near Fort Lauderdale, just right outside, and he is amazed that over the years his property tax just keeps going up.
yeah.
We're one of the few countries where we're constantly charging property tax every year, whereas in other countries, when you buy that property, you pay the tax one time and you're done.
Wow.
So, do Florida is known for population growth. Has there been a decrease in population since the housing crisis?
So it's interesting that you asked that question. So during COVID, we were one of the few states that was completely open for business. The state governor allowed for businesses to resume. They didn't have like any mandates where you had to stay home and so forth. And because Florida, we don't have like any income tax or state taxes, I should say.
Yeah,
So such a huge influx of growth here in South Florida. But although people moved here because it was a lot more affordable than some of the northeastern states, that buyers were not prepared for the the disproportion from the living expenses versus wages that were being paid to
Yeah.
them. And so there has been, I don't want to say a mass exodus, but there are people that are leaving South Florida and going back to those states that they came from, because the income that they're making here is not enough to sustain their housing expenses here. And there's oftentimes I meet other realtors from outside of Florida, and it's crazy because during the beginning of COVID, we had such a bidding war on real estate. And now we have inventory still sitting here. Some of them are idle, and there are some movement depending on the areas that you go to. But now those northern states where the people had, left to come to Florida, and they're going, and those same dwellers are going back to the northern states. They are experiencing that same bidding war that we had experienced in the earlier during COVID.
Well, I do know that um, you were one. Yes, one. Did you? Do you know if you might have had like a higher rate of COVID because he left the state open, or was it just pretty much balanced? That's an off-sided question in a way. I'm sorry.
So that's okay. So aside from doing this, I could answer that question because I also work in death care. And during that time of COVID, there was a large amount of fatalities due to COVID. I'm not sure if it was because he left the state open. Because I know New York experienced quite a bit. We probably were like neck and neck, or maybe New York probably might have slightly surpassed us. But
Right.
we experienced a very high influx of fatalities due to COVID. I'm not sure if that was because he left the state wide open, but I mean, it was really horrific. Some of the tales that I had heard from, families. There were, brothers and sisters that all lived in the same home that passed maybe one day after each other.
Wow.
Working in the industry, I've seen, double, triple funeral services. And then I've heard stories where when friends and families would come to visit their families, they would actually find their remains in their homes. So
Hmm.
again, I'm not sure if it's because the current governor had left the state open, that was the reason for that. But we did experience a lot of fatalities due to COVID.
Well, we're going to take a commercial break here real quick, and then we're going to come back and discuss the impact on minorities and low-income communities with mortgage. Okay. Be right
Okay.
back. All right.
All right.
At Proteus 420, they provide high quality services and educational resources to support your growth and help you thrive in the cannabis community. Efficient inventory management ensures you maintain a reliable product supply and avoid stock shortages. Their point of sale service tracks sales activity, helping you identify best sellers, top employees, and valuable customers. Stay compliant with built-in reporting, alerting you to the latest state and local regulations. With payment processing, accept payments seamlessly across various methods, including cash and debit. Their customer relation management system builds loyalty, ensuring tailored offerings for repeat business. Proteus 420, empowering your cannabis business for success. I want to give a big shout out to my man Marina and my man and his wife Marina, Sohan and Marina Bashar over at Silk Road. They're at 16630 Jamaica Avenue in Jamaica, Queens, New York. We are back with Miss Barreau discussing the mortgage crisis and what's going on in Florida. And to get started here, how has the mortgage crisis disproportionately affected minority and low income communities in Florida?
Um,
I mean, most of us know the answer. Um, but, for those that need to be reminded, But go ahead, please.
I'm gonna give my answer, but I'm curious to see what your answer is. So I'm gonna give my answer, and then you're gonna tell me what your answer.
I
So
like that.
your answer is, okay. So how has this affect the low income community? It's a lot. It's in my opinion, it's really layered. So I would say the way it's hitting the low income community. Whew, okay, how do I even answer that question? So first things first, a lot of times low income communities, they're not educated on how the mortgage process works. And a lot of times when young adults who enter the workforce, when they finish high school, nobody tells them how important it is to maintain their credit scores and have a healthy credit history. So when you come out of high school and you go to college, you're often given bombarded with opportunities to get credit cards and to get loans, but nobody educates you on the ramifications if you don't have a healthy credit history or credit score. Nobody tells you that until later on. You have like 400, 300 credit score, and you have massive debt, and then you're in your early 30s, maybe late 20s, saying, "Dang man, I can't even buy nothing. I can't even, get a car, and I can't do I'll do a lot of things because you have all this debt." And because of the lack of education, now when you're ready to settle down and you want to buy a home and start your family, because we're fed the adage of the American dream. Your credit score is one of the keys that unlock the doors to home ownership, as we discussed earlier. And as I mentioned to you earlier, the income that comes in um, goes hand in hand with the debt that goes out. And if you're not educated on, this early on, then you're going to have issues when it's time to buy a home, and then you're faced with paying high rental amounts. And that has become the norm here in South Florida. Rent is extremely high, and people are wanting to enter the path of home ownership, but they cannot because their credit isn't good. They have massive debt and their income is low. So those are the things that's not taught to them at a very young age. And then another thing that has to do with how it impacts low income communities is if your credit is not favorable, you don't have the opportunity to have favorable interest rates. You're subject to what your credit score affords you or allows you. So if you're someone who have like somewhere between 580 and 640 credit score, you're subject to whatever the lender gives you. Where if you were 680 and above, as a matter of fact, 700 and above, you get to choose. You get to choose the cream of the crop because your credit history is healthy. So if you have a higher if you have a higher interest rate because of low scores, that means your principal and interest, just a half of your mortgage payment is high. And then not to mention, we don't know what your insurance premium is depending on the type of house that you're looking to purchase, and then also the area in which you're looking to live, what your property taxes are going to be. So for me, the biggest issue with low income communities is a lack of education. I hope I answered your question, Michael.
Oh, you did. You did more than that. And again, answered like three questions in one, which I think is amazing because um, uh, my view is, as a historian,
Hmm.
it's a lot deep rooted in that because, for example, the healthcare crisis, that is not happening because of the ideology of the country itself. If when all of these civil rights, food stamps, housing, everything came to be in the 1930s and 40s, it was for poor white people. Uh,
Mm,
and the civil rights in the 60s, we didn't get that till 30, 40 years later. And even still, it was restricted. There were huge restrictions. So
right.
a lot of the problems, the reason why we can't get healthcare is because they don't want to give it to people of color as well. So there's a strong racial undertone here. And that also too, you know, my granddad, when he bought his house, it was, you needed 15-20%. You had 30 years to pay it off. Boom, that was it. In comparison today, you literally need, it's almost like you need the same money to rent as well as to purchase. And then all these fees and all this extra stuff was unheard of.
Mm-hmm.
So it seems like these obstacles are designed to keep people, anyone, from even to just discouraging them from buying a home.
Right.
I'd rather, let me keep this, because my mom said don't get too crude on your podcast. But I would rather be assaulted by a group of chimpanzees than to look for an apartment in New York City.
Wow.
That's how bad it is. It is one of the worst experiences I think a human being can go through in a first world country. The performative, the predatory practices of real estate agents here and brokers here, and the scams. You know, I'll see these videos of apartments in New York City that have a view for like $1,200, and I am commenting like, this is a big ass scam. You can get this for $1,200, and I would show them a picture of my bathroom and a closet, you know. But yeah, I'm in a 1-bedroom apartment in Parkchester, and I pay $2,600 a month.
Wow.
I moved in 2019 and my rent was $1,965.
Dang.
Yeah. Right. So it hurts. And not for the assistance that I have, I would be homeless. And that's almost 70% of the population of people that work that are going through this. So we are at the, you know, we're at the beck and call of the landlords and the realtors and the brokers. And I believe a lot of it has to do with the oppressive and racial ideology this country just needs to let go. And then not only that, you know, you have people that come from other cultures that just add on to the mess as well, you know, and not providing decent housing when they have the opportunity to do that. So I am blessed to be here and have the help that I have to afford this space. But for many in Florida, are there programs, say, for people that just can't afford to buy a home, but can get renters help? Because you literally got to pay what? Is it first, last?
And security.
Right? And if the rent is minimum $2,000,
$6,000
or one that's you got to pay, right?
Yeah.
Don't get backed up on that rent. I'm going to tell you, rent is what drove me mad in 2015, 2016. I realized I was an economic slave to the system, and I didn't see a way out. So I became homeless for 3 years and said, fuck it. I'm going to use the system that's here. And I did it right. And now I got this space. But
Right.
it was hard, but it also was a very meaningful and spiritual journey, because I actually gave more as a human being during that time than I did when I was housed. What do they call it? The unhoused now? They don't even want to use the word homeless anymore. They want to call it unhoused. It's just so fucking stupid. Excuse my language. So the next question, girl, this adult conversation too. I'll be telling people, let it out, girl. I don't want us. You know, you should have been on the, huh? What?
You did put the disclaimer at the beginning of the show.
All right, so I don't want to hear it. So let me ask you, are there specific trends where you're seeing loan approval rates and credit access across different demographic groups? So I know, like, for example, what applies to this one group don't necessarily apply to this other.
So what I'm seeing now, like the trends with approvals, everybody is getting in where they fit in. And it's crazy. Like now, you're seeing a lot of. For me, I don't know what it is. Most of the majority of my clients since I've started are women. So women are like getting into investment. They're wanting to, expand their portfolio, whether they're black or white or Hispanic. They're getting in where they fit in. Like they're like, you know what, I'm not going to wait any longer for someone to help me to buy a home. I'm going to get in and do it myself. So you're finding women who are, getting empowered in that way, through home ownership. Another thing that I'm also seeing too is that, what is that saying, that you can go fast if you go by yourself, and you can go farther if you go
Yeah,
together. So you're
right.
finding people who are getting on loans together, multiple people getting on loans together, up to four people doing it together. Say, okay, if I don't make enough, then we can do it together, where we can qualify for even a bigger amount. This can be our legacy together as a family or as
Hmm.
a unit. So I'm finding a lot of people doing that as well. Um, the interesting thing is that I'm seeing, for me, I don't know about other people, for me, I'm seeing more people are getting onto the investment bandwagon. I don't know if, like, I don't know, I always mix it up with BlackRock and Black something. I don't know if
Right.
BlackRock had lit a fire on in
It
the
did. It
social
did.
community or something. Now
Hmm.
people are just getting with it, and they're trying to see what their options are, and they're getting on loan with multiple people. They're creating these, companies or these LLCs, and doing things together as opposed to doing things on their own. And you're finding a lot of women getting into this real estate space.
Hmm.
Mm.
Okay. And I know my mom um, is traveling the country, and she noticed that a lot of her girlfriends in many different states have come together to, build that. They said they can do it better with a group, and they realized that they saved a lot of money
Yeah.
doing that. And I told, my family and I have discussed this, where we would, go and, put together, get some land and stuff. And that's what they want to do. They want to build like a lovely homestead up here. And I said, as long as it's in a legal state and it ain't red, and every freaking state they pick is red as fuck. Like North Carolina, Oklahoma. I'm like, yo, what are you doing? I'm like, I'm not leaving New York. Never mind. So let's just go buy an abandoned building in the city. We'll be good. Turn it into a cabaret, cafe, whatever, smoke lounge. We live upstairs and have a garden on the roof.
There you go.
So you answer so many of these questions and what we were talking about, right? But like how do rising interest rates affect someone's ability to qualify for mortgage? And it has to do with of course their credit score and their ability to show that they don't have too much going out and more coming in. That's basically what they really want to see, and they want to see this steady over at least a year, at least a year. So you already talked about what the advice you give to first time home buyers. Get your credit and shit together. And stop spending and buying stuff that you don't need, like those pterodactyl eyelashes and
Pterodactyl. Oh my
you
gosh.
know
Gosh.
um yeah, I'm serious. Fashion today is freaking me out. I saw my daughters are wearing them, and one actually looks good. My youngest looks great with them on, but I'm like, y'all gonna fly away one day on a windy day.
Fly
um
away.
yeah. So, do you think that the housing market right now in Florida is stable?
So, no pun intended, Florida is like a perfect storm.
Right.
It's a
Yeah.
perfect storm because, like, there's some parts of Florida that has been stable or stabilizing, and then there's some parts that have plateaued. There's some areas that are still like skyrocketing, or the prices are climbing. So there, it's just different pockets of areas, and you really like if you're going to purchase in Florida, you need to have someone who knows these areas, who are familiar with these areas, because you can't just go in thinking that all the areas are the same across the board. So again, just to reiterate what you asked me, again, there are some areas that are stabilizing, some that are plateauing, or the value are declining, and you're finding them on the market a lot longer
Hmm.
than homeowners would have liked or sellers would have liked. And then you have some areas that are still, rather desirable, and that the inventory are moving rather quickly. And you need to be prepared. Like if you're looking to buy in Florida, you need to be ready. If you should be interested in that desirable area, and you need to be ready if you're going to go into a declining in a market area that's declining, and the properties are staying there a lot longer. Those type of properties, you could probably find a good deal, and you could probably actually negotiate a good price, because again, some of these houses are staying. Usually it used to be just a couple days on the market, but now you're finding homes that are staying weeks to months at a time. And sellers are, a bit puzzled or bewildered how the market had changed just a matter of years.
Hmm. Well, I think a lot of it has to do with affordability,
Right. That's
with
true.
with with the ability to uh, not just afford the mortgage, but the cost of maintaining.
Right.
And everything is just going nuts. But we're going to take another commercial break real quick, and I'll be right back with Ms. Barreau, and we're going to continue our conversation on how we can survive and thrive over the next couple of years in this market. I'll be right back.
For too long, cannabis branding relied on outdated stereotypes. We're here to change that. Jadestone is a woman-owned, strategy-first creative agency, building brands that stand out, resonate, and perform. With white glove service and meticulous attention to detail, we transform ideas into bold identities and memorable experiences. From brand strategy and visual identity to packaging and dispensary design, every touchpoint is intentional, refined, and crafted to make your brand unforgettable. Let's create something extraordinary together.
All righty. That was New York City Cannabis Exchange. They're located at 24809 Jericho Turnpike. And I am back with Kathleen Barreau, Chat with Katt. Great podcast. I was on her podcast, a couple of weeks ago. It was very nice. And I enjoyed the darkness I was in at the time because I didn't have the right camera, but it actually looked really good in noir. I think I'm going to maintain that. But I will say, everyone, we are going through some major issues in our country with the policies of this current administration, and it's dividing a lot of us, but it's also dividing the people that are having a problem with all these policies as well. I don't want to get into all that, though. I think what's more important is like Katt. Let's talk about inflation and rising costs, for example. Cost of living in Florida and the housing market and how to survive and thrive that. It's obvious. A lot of it has to do with being able to have great credit, cash, and the confidence to live in a market that you're in. But for many, they just don't have that due to the financial situations, job market, whatever. As say a young family that is relocated from another state, they have relatively good um, work, and let's say combined they walk home with 100,000 a year. What could they get with that? I mean, what do they have to do to be able to go from looking to signing?
Okay, so this is a family, like actually
I would say a family of four.
Oh, okay.
Yeah.
So, I
And
mean,
they're not traditional. Just let's include them. They could be gay. They could be lesbian couple. I don't care. Just a family.
anybody.
Yeah. I don't know.
Okay, so what can $100,000 get you?
Right.
Well, so Florida is a very, very vast state.
Right.
I'm not saying that you can't get a whole lot here in South Florida, but you have to be very realistic. Single family homes tend to be a little bit more pricey than your condos and your townhomes. So my suggestion to them is maybe look into a condo or a townhome first, as a starter home if they're
Well,
planning on.
let me clarify the question. They have $100,000 in salary per year.
That's what I was.
Okay.
Yeah.
Okay. I just want.
Yeah. So my suggestion to them would be to maybe they should look into a condo first, or they should explore multiple areas or suburban areas in South Florida, because as I mentioned to you before, when you asked me if South Florida is stabilizing or not, there are some areas that are still quite desirable. And when an area is still quite desirable, the price is not so desirable for the buyer. So you have to be really realistic and understand, know that you're more than likely going to be in this home for at least maybe 6 to 10 years, and if you times that by 12 months, you are responsible for making these monthly payments every month, and then you still have a lifestyle that you have to maintain, and you still have to take care of these your offsprings or your kids. So I would suggest again to look at Florida Florida in its entirety to see where your money can get you, because saturated areas like South Florida, you may run into some sort of disappointment if you are looking for the four bedroom 3.5 bath on an acre of land in South Florida versus somewhere that might have been a lot more affordable in Port St. Lucie or Lehigh or Fort Myers or Belglade or something like that. So for $100,000, if you're going to move to South Florida, I would say look into possibly maybe condos or townhomes. And if you are insistent upon moving into a single family home, be open to different areas throughout Miami-Dade and Broward County, because there are some areas that I mentioned that are plateauing, and maybe your money can go further there.
Okay. What do you what should prospective home buyers and investors watch for the next 12 to 24 months?
So what they should be looking at for the next 12 to 24 months is interest rates. I know that every month we've heard from the Feds, from Mr. Powell, we're cutting interest rates, but don't just depend on the Feds to lower interest rates. Like I said, lenders are getting really aggressive, super aggressive, wanting your business, that they're willing. One particular lender, for the months of July to November, they were willing to give you almost a point or a percent off of interest rates for your refis. There was no other lenders that were offering that. Most lenders are just going to offer you 0.25%. So if you're seeing those type of promotions, my advice to you is jump on it. Don't wait for the Feds, because every time, and here's a trick, every time that the Feds say that rates are going to go down, they always go up. So
Right.
don't just wait for the feds to lower the interest rates. Look at what lenders are offering, because sales is sales. Everybody's in it to get your business, to get your business. So lenders are always offering promotions. That's one. Look at your inventory levels. You want to see, if there's a particular zip code or a city or a county or a township that you're interested in. From time to time, look at the inventory levels. Are they increasing? If they're increasing, that means you have room for negotiation. Are they decreasing? That means that other people like yourselves are also looking into that area. And if this is an area that you're interested in, you want to try to get in and see where you could, what you can purchase in that area. Another thing that you should look into for Floridians is the insurance changes, because insurance is one of the biggest issues with mortgage payments, that people can either make or break your deal. That you want to stay on top of insurance policies. Like what's the state doing about that? What's your county doing about that? Because sometimes counties will give you money towards your mortgage because they don't want your home to go into foreclosure. They don't want your home. They don't want you to lose, because that means you're not paying your property taxes. And when your home goes into foreclosure, the lender takes a hit and has to sell that property at a discount, which affects your the value in that neighborhood, which also affects your homeowners. And if the value is going down, then they're going to want to jump ship and sell and go to a more favorable desire, and that area declines. So you want to also look into that too. And if you're someone that don't want to purchase a single family home, but you're comfortable with a condo or a townhome, you want to also look into what's going on with the HOAs, because just a couple of years ago we went through a huge disaster. Where Surfside collapse, where that one, I forget the name of the complex, but at Surfside, there was a building that collapsed overnight, and that forced all of the older condominiums that are 40 years and older to go through their 40-year recertification. That they've already levied assessments on their residents, and they're trying to correct all the issues that are going on with their building, which is good, because that means by them making the corrections, they're adding value to that condominium. And then let me see and lastly, you want to also look at your local job growth, because even if you're an investor, your tenants are going to need to have a job to pay your rent. So you want to see how the local job market is going for them to be able to sustain the rent that you're asking them for.
Okay. Well, I got to tell you, answer again 3 fucking questions. Ridiculous. You really did Jesus Christ. It's amazing. I love it, because
and when I got on the show, I said, I'm just going to limit it to 2 minutes. I'm not going to.
No, you did it. But we do know that a lot of these homeowner insurance policies are restrictive and costly. So, and it why do you think it disproportionately impacts lower income policyholders or buyers?
Can you reframe the question? I'm sorry.
Well, all right. So do restrictive or costly homeowner insurance policies disproportionately impact
okay.
low income and buyers?
Yeah, so it is. So homeowners insurance, that's, like I said earlier, it can make or break your deal, and then it could also either make you struggle or not struggle, in the sense that it's crazy. Like I've done people's mortgages where their principal and interest are like $700 a month, and then when you add in their insurance, it's like an extra $800. And I mean, with $800, you could do a lot. If you have a car note or credit cards or just your lifestyle, or you have kids that you're paying daycare, those variables can help you incrementally. But homeowners insurance is, especially here in South Florida, it can be damaging to your monthly expenses, and something that really needs to be regulated. I'm not an insurance agent, so I can't give you too much commentary on it. But from what I see in pre-qualifying or pre-approving people's loans, or it's a huge major factor, and it can cause your debt to income ratio to exceed the allowed threshold that lenders give you in order to qualify for a loan.
And that's where stabilizing insurance and property tax costs can come in. Correct.
Exactly. And so this is something that, our lawmakers need to work on, because if this continues to escalate, you're going to find a lot of people either just selling their homes and moving elsewhere, because, I've talked to other buyers, or investors who are buying in other states, and they're saying how much it's so much affordable. The same type of home that is the same square footage. It might be structurally built differently, but the same square footage, the same lot acreage, about almost the same age, but you're finding their insurance policies is a quarter of what is being asked here in South Florida.
Right. And I think a lot of that has to do with the insurance brokers getting high commissions on these policies.
Again, I'm not qualified.
Right. No, because I'm hearing, if you looked at how your annual insurance cost is compared to, and well, what is that paying? Okay, you're paying to make sure your house doesn't burn down. You have all that, right? Well, that's a rarity in many cases. And how is this money proportionally being spent within the insurance industry? And we're finding that a lot of it is going to commissions, right? So, but how can local communities advocate for change in that? Because it just seems as though, first off, when I first got my first car, my monthly car insurance, full coverage, was $24 a month.
$24.
Yeah, girl, that was it. And next thing you know, within 5 years, it's like $100 a month, and it just keeps going up every year. Now it's proportionate to a car note.
Yeah.
Right. And that's like crazy. So, and it discourages people from, I believe, wanting to, purchase a car, because you literally now can Uber and do taxis and save more money than to, have your own ride. So, how can, local communities advocate for change? Would you have any advice or opinions on that?
Well, in South Florida, there's a few people that they make it their business to go to commissioner meetings, to city halls, to voice their opinions on what can they do about affordability, because it goes back to that, and you mentioned it a few times throughout the show, affordability.
Mm-hmm.
So on the local level, like affordability for housing, that is something that needs to be discussed. And if people go to their local commissioner meetings, or they go to the commissioner meetings or the city halls and voice their opinions on that, and they can constantly go and put pressure on their local politicians, and not only just them, but if there's multiple voices, or it's a chorus of voices heard at these meetings, that, in my opinion, can make a difference. Now, with insurance, homeowners insurance as a whole, that is something that you have to tell your lawmakers on the state level, because I'm not qualified to talk about homeowner insurance, but when I do watch the news, it makes it into that level, in the state level, where policymakers or lawmakers, excuse me, are trying to talk to insurance carriers to come down on their prices, because it's becoming too much. It's becoming extremely costly for homeowners to continue paying that. So what can they do to make a difference is to put pressure on the people that you vote for to go into office. to create change that they said that they would during their campaigns.
Okay. All right. Yeah. And so definitely going into being involved in local community politics, attending those meetings and making sure. Okay. Do you know of any other states that Florida could replicate maybe their successful models, or can you think of any other states that might have successful models that Florida could replicate?
Well, okay, so I would say I don't have a state per se, but any state that could combine housing strategies with housing strategies that target first-time home buyers to create some sort of affordability, and then perhaps like stronger consumer protections could offer those types of good models. So if you have programs that target your first-time home buyers, that could assist them with their down payment assistance and their closing costs, and then also the models that there's some okay, I'm going to say this: Florida or South Florida has some good programs for first-time home buyers, and they have some good programs for those who are currently homeowners. The only issue that I see with them is that they move extremely slow. Florida has all these different down payment assistance, and they work hand in hand with on the federal level, like Hometown Heroes, and each county has their own down payment assistance. But it's just the speed in which you're getting approved for is not realistic. As a and I'm going to say it like this: as a seller, you and I are in under contract, Michael, and there is taking 5 months just to underwrite and approve your down payment assistance, that's ridiculous. Like, why is it taking so long? Why? Why is it taking so long? I mean, is it just one underwriter that's underwriting for the entire county? You need to look into hiring multiple underwriters to get the job done, because you're now competing with lenders that are trying to give them the same type of service, and it takes them 30 days or less. So I don't think that it's a problem. Our models are bad. It's just that it needs to be updated, or it needs to be corrected. And then you also have programs for those who are currently homeowners, where they'll give you money to pay your mortgage just as long as you're within the jurisdiction, or they'll give you money to repair your home, like remodelization. But a lot of it has to do with speed, and you're at the will and the mercy of the county, and you have this one person that's processing all these applications, and it's like, where is the budget to just hire more hands to look at these applications?
Okay.
So I don't think it's a problem with our model. I just think that we have a problem with speed.
With speed, yes. I think also too that justifies their commissions and their payments. You know what I mean?
That goes back to what you were saying about the commissions too, because a lot of these, and I'm not going to name any names or anything like that. A lot of these politicians or elected officials that could make the city more dynamic for affordability, just by shifting the budget towards hiring more people, more hands to underwrite these down payment assistance, and to underwrite or to process these applications for revitalization or remodelization. But they choose to keep this budget in whatever bucket that benefits them, instead of their actual constituents that voted them in office.
Okay. All right. Yeah. So let's definitely get the right representatives in there to help that way. So what's the next best step for someone struggling to navigate the current mortgage market? Real quick.
The next best step, you need to have a plan in place. You can't just say, oh, I want to buy a home, and just hope on a wish and prayer that you buy a home. Like, you need a strategy. The first things first is you need to know where you stand financially. Like, if you can even afford to buy a home, you need to be realistic and have an honest, assessment of your finances and look at your credit report. What are some things that need to be worked on? I mean, do you have stuff in judgment? Do you have, are you constantly in the weeds with your revolving debt or your balances? You need to be mortgage ready. And there are, financial advisors that are out there that can educate you to help you to get mortgage ready. So my first advice to you is to have an honest look at your financial history, look at the debt that's going out versus the income that's coming in, make an assessment. Am I making enough money to afford this lifestyle or this dream home that I would like? And look at your finances. Also, too, while you're looking at your finances, if you currently have credit cards, you need to pay your debt down, because those are the things that can hold you back from actually achieving home ownership. Another thing that you need to look at is stop buying stuff. Things
Yeah.
that you don't need. Somebody always says that there was a saying that we buy things to impress people that we don't even like. And those people are not going to be at the closing table. Those people are not going to be on your loan. So stop buying unnecessary items that you no longer need. And
Right.
then lastly, work with somebody, whether it's myself or a mortgage professional of your choosing, that can create a game plan for you, because there's so many different programs out there that you don't have to do the traditional FHA loan. If you're a veteran, they have VA loans for you. Some mortgage professionals may not like to do them. Get with someone who specializes in them, who are good at doing VA loans. Because if you're a veteran, you have 100% financing. You have financing that I don't even get, because I didn't serve in the military. And then
Right.
if you're an entrepreneur like myself, and you get variable income, meaning that you don't work a 9 to 5 and you don't clock in, there's different loans out there where they look based on your bank statements. They look at your profit and loss statements. There's so many different programs. And if you're someone that's a foreigner, they even have loans for you too. There's not one size fit all. There's so many different programs for you as well. So again, have an honest assessment at your finances, your income, what's on your credit history. Stop, pay down your debt. Stop buying unnecessary things that you don't need. If you're in the process, home ownership process, and you actually are under contract, don't open credit cards or buy a car or get a furniture credit card before you close, because the lender is going to look at that stuff before you close. And then if you're not under contract, try to have a plan for like 60 to 120 days. And it's a realistic one.
Okay. Well, how can everyone get to you?
I'm glad you asked. So everyone can get to me. My name is Kathleen Barreau for Pristine Green Financial Solutions. I'm located here in South Florida, North Miami, Florida to be exact. You can reach me at Kathleen, Kathleen, Barreau at gmail.com. I am also on Instagram and Facebook. You can find me on both of them. Instagram is Katt with 3 T's,
Right.
_loans. And then you can find me the same way Katt does loans without the underscore on Facebook. And if you want, you can call me for more information at 786 or text me 786-253-0211.
All right, my love. Thank you so much. I want to say this was a pleasure talking to you today. I think that you gave so much information today, and we're going to do more. So this is like
I love it.
Second part.
Good.
Yeah, and I want to thank everyone. So let me wind it down, let everyone know. I really appreciate everyone for coming on today. We are currently ending the season with this podcast. January 22nd, we'll be starting the second season with Megan O'Malley. I'll have another interview with her coming up January 22nd on my birthday. So I will be having a birthday podcast next year just to goof off. I want to wish everyone a beautiful day and thank everyone for just, checking out our pre-recorded podcast. We would have done it live, but Katt was scared.
I was a chicken. I was a chicken.
So, but yeah, I mean, we are, I'm very happy that you came on, Katt. I want to thank my sponsors, Proteus 420, Green Spectrum CBD up there in Hopewell Junction, New York City Cannabis Exchange, Surfside. They are a technical group that can help you with your SEOs, I believe, and some other more, it's really technical. I'm going to get them on actually next year to discuss their products and services. And also Event High, Meyer Security, Jadestone Branding, Cannabis Branding, Silk Road. I love Silk Road, Gordy's Goodies, Whip-Eye Distributors, and Pink's Products. Again, thank you guys so much for hanging out with us. I have been very blessed to be doing this the last couple of years. And we just finished our second year. Well, let me see. I started January. So yeah, I'm starting. It's unbelievable. It's been a lot. But thank you so much, everyone. Remember to just sit back, relax, enjoy your holiday season, your new year. I will probably have one more podcast to end the new year and bring in the new year. I don't know. It depends on my attitude and my mood. Thank you all so much. I appreciate you, and peace and blessings. We'll talk soon. Bye-bye. All righty. So let me see if I can end the recording. And if we disconnect, I'll call you.